Yo, what's up, guys? On this week's trade, we got a 25.93 to reward ratio. That's a 1 to 25.93 reward ratio on EURCAD, which you know that this is not a pair I usually make analysis on. I make analysis mostly on Euro USD or GBP USD. I got this trade on a Tuesday. On Euro USD, as of that Tuesday, it wasn't really looking good. It wasn't really looking nice. Price was retesting my entry point. I had to close at break even. That was why I opened EURCAD to see if I could find a setup trying to counter the USD and Euro. I went for EURCAD. Opening this, that was when I discovered this order block immediately. Now, at that time when I opened the EURCAD, I had price has already started the move that already mitigated this order block, this OB here. That's this particular one. Price has already mitigated it. Then I had to look for a re-entry on the lower time frame. I went to the 3 minutes time frame, which was down here. As at that time, price already mitigated the order block. I saw another flow there, trying to catch a re-entry. Order flow, price mitigated the first order block, mitigated the second order block. Now on this second order block was where I took my entry. There. I had an entry run through down to this place. Since I knew price was going for this liquidity, the liquidity down here, you can see it. So price needs to clear out this liquidity. As we all know, liquidity is like a fuel. It's what attracts the market, just like a magnet trying to pull down a metal. So that's how liquidity works. So because of this liquidity here and these buy stops here, we have a buy stops here also. This place is a buy stops here. As at that time, there's a buy stop here, which is also another area of liquidity, another confluence of liquidity at this point. Buy stops. So considering these two liquidity factors, that was what made me enter this trade for a sell. I took the trade for a sell. After much price movement, we had another mitigation. Let's go back to the 50 minutes so I see it clear. We had another OB which should be respected. Remember I said order flow has consistently been taking place on the market. We had the first order block, we had second order block, third one. Then price had to respect this order block which has not been mitigated. Consistently other blocks have been mitigated. Watch, this was also another block. The price respected. Now on this other block also I took a trade again. Let me show this aside. I took a trade on this place. I took an entry. It hit TP after the break. There's a break here. After the break of market structure, that's break of structure. That's the break of structure at this point. Break of structure. Then price headed for the next order block, which was this. We had the break of structure again. Another break of structure. And at this point, price also, I set another order block, expecting price to reject from these points, but unfortunately for us, price already changed its market structure, going for an uptrend. So in total of what we got last week was a 1 to 25.93 risk to reward ratio with just a simple confluence, getting the right order blocks, Then noting the fact that there's liquidity below, the buy stops, sorry, the sell stops, rather, not buy stops, sell stops, and this range of liquidity here. Let's correct that is sell stops, not sell stops. So the sell stops and this range of liquidity. Remember, we are trading supply and demand. With this other block being mitigated, we went to the lower time frame to get an entry. Getting to the lower time frame, we discovered another flow taking place there consecutively. Covered another flow. We had this first order block respected, second order block respected, which we got an entry for it. Then on the third order block, we entered for this also. We hit TP. Fourth one hit TP. Then the fifth one, we had a break even there, or probably a loss. Had a loss there. In total of what we got, 1, 2, 3, 4 TPs, 1 loss. Then on Friday, we took this short flip here, almost the same criteria as this, like almost the same criteria as this trade here. We had let me zoom up so I see. We had price cleared this zone of liquidity, this area of liquidity here, cleared it off, formed an imbalance. There's an imbalance candle all over this place, right in this place, and we all know that imbalances are also liquidity, are also confluence of liquidity in the market. So price need to rebalance this before making any movement. Because of this huge spike, I set my OB the other place, because an OB there, another block there. That is, price had to clear the liquidity, then mitigate my other block before a short sell, not a long sell. That's why you look at it, it's just a flip, a 1 to 3.44 risk to reward. So hit TP also on that. Then we have price ran up to respect the other block above, which it did not mitigate. So this week, coming week, expecting price to go for this other block below. Expecting price to go for this other block below. Why? It's one of my trading model, price to clear off liquidity here, took off the liquidity here, then it broke structure, took off the liquidity, mitigated another block here, broke structure here, sorry, at this point, broke structure here, so which confirms this other block here, this particular one here, which confirms this other block. So whenever price gets to this other block, we'll go for a buy at this point. When price gets here, we'll go for a buy, targeting the nearest highs, whichever nearest high price forms before getting to the other block. That's what will be our target. So for this week, we should be looking at sales down to this other block. Then whenever price gets to this other block, we'll go for a buy, targeting the nearest highs. As you can see, I did also in this place. I was targeting the nearest highs. After this break of structure, I targeted the nearest high, break of structure, I targeted the next high. That was it. Even this one that was on loss, I targeted this point, the nearest low, also in this place, nearest low. Same thing I'll do for this particular one whenever price gets to this place. So we should be looking at this from next week, this area, just considering this part. Just what we're looking at, watch price behavior there, and also the approach of price to this other block before we make any decision to take a buy or not, because the actual liquidity is down. These are imbalances that price also need to clear, so we just need some confirmations before we can be able to take buy. These are imbalances, these are sell stops, also liquidity conferences. So that's it for the trade I took on EURCAD last week, which gave us a total of 25.93 risks to reward. We sum up 14.21, 4.65, 3.63 and 3.44 true for the week, about 25.93. Then one loss. With a good risk to reward ratio and a good trade management, you should be on a good side, because you just consumed a loss, just one loss out of 5 trades. That's a good one for someone that has a good risk to reward ratio and a good trade management, a good risk management system, a good trade management system also. So if you like this kind of videos of a breakdown like this, breakdown of how I take my trade, how I got entries on this also, please subscribe to the channel, like this video and share to your friends, your community, your trading communities. Thank you guys, and see you in the next video.